Hi everyone, this is 2026 Mentorship Program Lecture 21. And in this lecture, I will be doing a weekly top-down analysis. Now, in the previous weekly top-down analysis, I explained to you guys what I'm actually looking at in price and what I'm anticipating price to do from the weekly time frame to the daily time frame. So in this lecture, I will be covering up what price did, and at the same time, I will be telling you guys what I'm anticipating going in this week. On the weekly time frame on the dollar index, last week I talked about this weekly fair value gap has a resistance area to lead to lower prices for price to run the sell side liquidity. The idea was that as long as price is still inside the fair value gap, price haven't filled in the fair value gap, I'm only anticipating lower prices to run the sell side liquidity. Which you can see price traded higher, took out the buy side liquidity, which I told you guys about the possibility of price trading higher to run the buy side liquidity. Once we get to the daily time frame, I will explain more on this. Looking at the current price action, if I were to anticipate this week, after price took out the buy side liquidity, price filled in the weekly fair value gap, traded through the other block, and currently this is a shift in structure. Now there isn't any fair value gap in price, which you need to pay attention to how the next candle will be closing. It's going to most likely going to tell you what the next week's is going to be. Because if price were to trade higher and leaves out a fair value gap, there's a high chances of a continuation trading higher to run the high, to run the buy side liquidity. But if price were to trade lower, fill in this candles range where there isn't any weekly fair value gap, there's a most likelihood of a retracement to run the swing low or possible a complete trade lower to run sell side liquidity. But the only draw on liquidity we can look to is the buy side liquidity. We're going to look at a possible candlestick continuation because the previous week candle closed above this week candle. You can see it's a close above the candle's range. So there's a likelihood of a continuation, and the draw on liquidity should be the previous week high. So the only draw on liquidity I'm having going in this week is a price to run the previous week high. On the daily time frame of the dollar index, last week I talked about the daily inversion fair value gap. I told you guys that the daily time frame is not aligned with the weekly time frame. That was one of the major reasons I'm not taking advantage of any setup, like say a run on a swing low, shifting the trend from an uptrend to a downtrend. And I still told you guys that if price were to trade against the weekly bias, it should use the daily inversion fair value gap. And you can see how price supported from the daily inversion fair value gap, traded higher, took out the buy side liquidity. Going in this week, the major time frame for you to spend most of your time in, which I already talked about on the Telegram group. I already talked about what I'm currently looking at on the Telegram group on the dollar index. That spend most of your time studying the daily time frame of the dollar index. Because if price were to run the previous week high, you should see a retracement to a daily fair value gap before actually expanding to run the high. So pay more attention to the daily time frame. Wait for the right timing of a continuation, of a trend continuation to run the swing high, which is the previous week high. So going in this week, this is going to be one of my major focus to see a retracement to the daily fair value gap and to see how price will be using it as a support to run the previous week high. On the weekly time frame on Hero USD, last week I told you guys that the correlation in the technical side of Hero USD is that for price to respect the weekly fair value gap on the weekly time frame. And I was looking for a continuation to run the buy side liquidity, which you can see how price traded lower, took out the swing low, traded through the other block, traded through the weekly fair value gap. Currently in price, I'm still anticipating a continuation, which I've explained on the dollar index that depending on how the next week candle will be closing, if the next week candle is going to form a fair value gap, I might anticipate a weekly continuation trading lower and a possible downtrend to run the sell side liquidity, depending on how the candle is closing. But the only clear draw on liquidity is a continuation trading lower, which is the previous week low. That is the current draw on liquidity I'm currently looking at. Depending on how this week will be closing, it tells us where price is most likely to do. Because if price were to trade lower and there's a fair value gap, then there's a possible continuation trading lower to run the sell side liquidity. But if there is a retracement filling in this candle and there isn't any weekly fair value gap, there's a likelihood of a retracement. Um, More possible a run to the buy side liquidity. So pay attention to how price will be trading this week. The major time frame for you to spend your time in is the daily time frame. On the daily time frame on Euro USD, last week you can see that after price used the daily fair value gap as an inversion fair value gap to trade lower to run the sell side liquidity, which I've talked about on the Telegram group, that a continuation on the dollar index trading higher would lead to a continuation on Euro USD trading lower. Looking at this price action after the run on the sell side liquidity, price formed a swing low. And looking at the price range, here is your swing high to swing low. A retracement before trading lower is an ideal price movement. Now, at the same time, pay attention to this daily fair value gap on a discount level. This might be a resistance point in price where price will use in trading lower. But the ideal way is to see a premium resistance in price trading lower. Now, depending on what price will be doing, just pay attention to what price will be doing and look at the high impact news to how it's impacting in price. Because last week was NFP and NFP only led to a trade lower before a retracement, retracing the whole move. And currently, looking at this swing low from the daily time frame, I'm most likely going to be looking at a daily bias in retracing to the daily fair value gap. On the weekly time frame on GBP USD, last week price traded lower, took out the sell side liquidity. Now the price action on GBP USD is still similar to the dollar index because they both took out a major liquidity on the weekly time frame. Now there's a retracement on the weekly time frame, making this candle more of a wick than a candle, so it's a doji candle. But I'm still going to stick with the idea of a possible retracement, and the draw on liquidity should be the previous week low. Still sticking to the idea of price trading to the previous week low. Because if the dollar index were to trade lower or higher, is most likely, very likely going to react the same way on GBP USD. So if I'm anticipating a higher prices on the dollar index, then there's a possible continuation of the trend. Because looking at this candle, it's still closed below the previous candle's range, so there's still a likelihood of a retracement trading lower. And seeing that price already traded through the weekly fair value gap, took out the sell side liquidity, there's a possible continuation trading lower. On the daily time frame on GBP USD, after price took out the sell side liquidity, you can see the retracement to the weekly fair value gap, using it as an inversion fair value gap to trade lower to run the sell side liquidity because before the close of last week or the previous week before last week, price already traded through the weekly fair value gap, and during this time, price was actually retracing to use it as an inversion fair value gap to trade lower. So I can say GPUSD was already giving the signal that price is going to trade lower to run the sell side liquidity. But because there wasn't much of a correlation to what I was actually looking at from the dollar index, so I didn't take advantage of the sell, actually running the sell side liquidity. But after price took out the sell side liquidity, there was the retracement, and so far price from the swing low on the daily time frame, and from the swing high to the swing low. If there's going to be a possible continuation in price trading lower, the point of interest I'm actually looking at is the daily fair value gap and the daily order block at the resistance area in price, leading to lower prices to run the previous week low. That's actually where I'm currently looking at on the dollar index. And I'm trying to make this weekly top-down analysis, the specific one, a little bit short. So if you notice, I haven't been going to the 4 hour or the 1 hour time frame. I'm just giving you guys a broader idea of what I'm actually looking at. Is for you guys to go in. I want you guys to study the price action on the 1 hour and on the 4 hour time frame. Look for those times that you would have taken advantage of last week price action if you were to anticipate a run on the sell side liquidity. You need to tell yourself that you saw it beforehand. Those are the times you build up the reps and understanding how to actually take trades and how to actually anticipate price and have the courage in taking those trades, having those confidence in actually risking your money in taking those trades because trading with a live account has a different feeling than trading a demo account or even a platform account. Now, a platform account still have a little emotion to it. Okay, because I still have an emotion in it because seeing you making profit on a prop account, getting close to passing a phase one or phase two, or even close and getting a payout, there is a feeling to it. But trading a demo account, you can actually feel it. So it's better for you to gain those confidence in looking at the price action, knowing when a lower time frame is ready to deliver to what the daily time frame is actually implying in price, in where price should be going. Now, the daily time frame price is actually showing a clear signal in price trading lower to run the sell side liquidity. So go through the dollar index, Euro USD, GBP USD, USD JPY. Look at how price delivered. On the weekly time frame on USD JPY, I talked about using this other block as a resistance in trading lower to run the sell side liquidity, which you can say price traded through the mid range and a complete trend running out the buy side liquidity. And going in next week, I'm actually looking at a continuation in price trading higher. But the only drawn liquidity I can point out in price on the weekly time frame is the previous week high. That's the current drawn liquidity I'm actually looking at. But at the same time, spend more time on the daily time frame because if there's going to be a continuation, the daily time frame should be the top lead in identifying those key moments where price will be expanding, creating a new high, and a possible continuation to actually run the buy side liquidity. Because seeing that the weekly fair value gap failed, a most likelihood of price using that fair value gap as an inversion fair value gap to trade higher to run the buy side liquidity. And the reason I didn't put out the fair value gap, I don't want the chart to be crowded. But the bias is still the same. Current draw on liquidity, previous week high. Most time when to spend your time in understanding the draw on liquidity going in this week would be the daily time frame. On the daily time frame on USD JPY, now last week was quite obvious in price running at the buy side liquidity because looking at the other block, price was already above the mid-range of the other block, and if price traded through a mid-range of another block, there's a high likelihood the price is going to trade through to run the buy side liquidity of that other block. And that was what price actually did after the retracement on Friday in closing as an up close candle within the range of Thursday. Monday open took out the buy side liquidity. Tuesday did a continuation, running out Monday's high. Wednesday retraced to the fair value gap that was formed. Thursday took out Wednesday low, respecting the daily fair value gap, did a 1 hour shift, and a continuation in running out the high, the daily swing high, which is a buy side liquidity. Now I'm going to leave this whole price action for you to study on how you should have taken advantage of it if you were to look at this a draw on liquidity. And that was how price delivered in running out the high. Going in this week, the draw on liquidity is still anticipating a continuation trading higher. If you want to see how price will be trading higher, are more possible if this trend were to continue because currently price actually respecting the daily fair value gap. If you were to continue, the draw on liquidity should be the swing high, which is the buy side liquidity. So going in this week, I left a little bit space for you guys to study on, which is the 4 hour and the 1 hour time frame. I already gave you guys a broader explanation, and which is only in this lecture. I think in another lecture we'll be diving deep into the 4 hour and the 1 hour. The reason is that I want you guys to have something to talk about on the Telegram group. And if you have watched this video to this part, which means you're actually serious in whatever craft whatever you're doing and in developing your craft in trading. So I want to see feedback on this on the Telegram group. I want to see screenshots of trade you would have taken advantage of if you have had the bias on those three major currency we took that I normally take trades on, which is the Hero USD, GBP USD, USD, JPY. So it's like an assignment. Go in, look for the setup you would have taken advantage of, and I want to see screenshots on the Telegram group so that we can discuss on those screenshots. And those are the ways for you to build your reps, telling yourself that if you were to anticipate higher prices and price did deliver at higher prices, how you would have taken advantage of those trades. So I left out those time frame intentionally so that you guys can use it in answering those questions. Because I'm not actually normally trading these days because I'm just mostly spending my time studying the chart. Still have some things to settle before actually going in taking setups, and the weekly time frame haven't been favorable to the weekly expansion trades. I only took a day trade, and those day trades are based off a daily trend idea, which we did a live top-down analysis. We did a live trading section last week, and I love the way people turn up. I think there was around 12 to 30 people that watched the live. They were with me when we went through the live, so it was pretty impressive. I thought it was going to be as usual, maybe 5 or 3 people. But the fact that you guys went above 10 and was around 12 to 30 people that did watch that live trading section. I will be having more of it, which I've discussed already on the live trading section. And you guys liked the parts that I was showing you guys how to anticipate bias, that I was using the 5 minutes and the 1 minute. There's going to be more of that watching me call price live, watching me explain how I'm anticipating price on every given condition, what I'm actually doing if I'm waiting or if I have a clear draw on liquidity. More will be done in this week. So that's it for this lecture. See you guys in the next lecture.